Happy Valentine's Day. This is TradeTheNBI.com. John speaking. It's the 14th of February and kind of a pivotal day the other day here as we've been heading into this significant short that had been set up. We'd start to see the subtle changes here in our DOC readings here as our momentum to the downside began to fade as we based here after matching those lows from our dip below the red line. We ended up getting into green territory on it. We're still looking at a very weak shakeout readings in the sense that even though we're getting this little uptick, it really hasn't turned the corner yet as far as sustainability. I mean, we have midterm buyers here in the green, it's crossed red, that's still in a flat line. So we didn't even see any orange dip below yet or anything like that, but we've got a little momentum to the upside here. Short-term buyers even as well, getting into pretty lofty territory on a daily. So we're getting a little updraft. You can see a little GAM here in the form of a yellow buy candle. So I think it's cautiously optimistic. It's not something that I would be jumping at, just expecting it to ride indefinitely at this particular point, but definitely worth taking a look at. But then we talked about that long and short opportunities within this basing setup, and that it was a pretty good follow intraday to be able to take both options. We've had some excellent volatility moves. Now we're still even here on the NASDAQ, minus 16, above 13.5. Negative 13.5 is usually the line. And actually on the shakeout, you can add that if we go to format. Gives you the options in the inputs. And we would call that, there's the top outline, which would be the plus 25 warning line. And then right here, the buyer's line. If we click that as a 1, you can watch how that flips. It's going to put in a little magenta line just from a visual right there. So usually above that point is when you get positive reaction from a shakeout standpoint. So that becomes an opportunity at that point to be able to jump back in. Let's move on. So the euro rebounding nicely off that reset of the shakeout is turned around. You can see this is just short-term buyers flooding. They had been reset all along, even when we had the brief DOC spread, so which clearly is short from that point. But it came down based right at exactly what we were looking for, right around the 122.5 range was what my expectation was on it, and so we've seen it pop back in there, and that's just because of the uncertainty with dollar behavior and how active the Fed's going to be. You can see Treasuries have based just a little bit at the particular point, still within a very soft period, and it's so easily defined here when you can see the shakeout moving negative. Things just got soft and weak, and it's exactly what we look for, and it's still not in bad shape here from a Treasury standpoint, so there still could be a little rally in there. The big story has been this USO. We had talked about positive extremes going all the way right back to here, and geez, you can go back to the videos. We talked about that from when it first broke out, that this would be the retrace point, and lo and behold, but a lot of distribution on that, and that's just because there's an exorbitant amount of supply, because as things get constricted, what we've noticed is the ability for the U.S. to turn on that spigot. And this is going to be a challenge going forward for it, but it hasn't changed the fact that we're seeing significant use, which has been the big question as far as economic growth and why we tend to follow that. It's been a paradigm shift with the whole shale and the ability to really produce energy and now even export from a U.S. standpoint. Gold having filled in those positive extremes from before. We had a couple that are still back here. Doesn't look like we're quite ready to reach those levels down there. I talked about the ABM green, which is obscured by price right now, so I'll put it up here on the little window. Was at the 125.74, which I said was a perfect pivot point at that point to take advantage of any return. We had the reset. It was a little early with the short-term buyers, but midterm buyers have filled up. But it's sort of in a no spark zone, so I don't know that this is going to produce runaway move at this particular point. In fact, I think that it's likely to be a little choppier But here we had the 5K, and so it was an interesting setup. We ended up with a brief little down, and then it just pretty much was jagged nothing as we were flat. And then the shakeout moved to the positive, which ultimately left us with right around the even flat, and then boom, we finally later in the day started to take off because we based across this 50%, started to rise, and then boom, it took off. And we're still in a continuation from that move. We've got some positive extremes since pre-market moves, probably going to come back a little bit, but I would expect the highs to be retested if we even fade back on there. Just typically is a pattern that we notice on a regular basis as far as how the ES tends to work. We are really starting to see more of that mean reversion, which is traditionally what the market used to be long before we had all the quantitative easing in that. So what we're starting to see with this chop is what I would call a bit more of a normal market, something that we've been looking for quite some time. And coming off that whole volatility play, which was coincided with the release of the memo, and that I think things have pretty much calmed down, and was a perfect opportunity for normalized correction. It just happened to be quicker than people were used to, which created all sorts of excitement, but percentage-wise was very normal. It's nice when you look at these big numbers, but because the market has moved so far, those numbers are going to seem bigger, and it's fine. It just creates the opportunities within overall action to be able to take advantage of nice little swings. A little tougher from a daily standpoint because within this weakness, just now getting what would be considered something that you could actually latch onto for a little bit of a run. But even still, I think that it's going to be a bit more choppy than people are used to. So you're just going to have to be more in the swing mode as opposed to just like everyone had been during this whole flood of money and the expectations. Now that we're starting to get an idea of what the tax reform and everything starts to mean, it's going to start leveling things out. It'll be interesting to see how the market interprets some of the earnings that are coming out. It's going to be a little skewed with some of these tax break moves. It's going to throw things off, so they may seem a little more rosy than going forward, but a lot of it's going to be just because of tax. So some of that's going to have to be broken up to see how much is actual growth in that. But we'll play those as they start to unfold in the coming weeks. As always, though, continue to trade well. I'll put anything up that's relevant on the Skype chat as I have been. Trade well.